Hello guys, so we are looking at GBPNZD on the 4-hour time frame, and firstly we just need to look at the overall market structure. And as you can see here, the market was giving us higher highs and higher lows. We had this high here, then we had this low, then we had this higher high here, then we had this one as our higher low within that point. And these are overall breaks of structures to the upside. As you can see here, break of structure to the upside. Around here we also had another break of structure to the upside, and then we expect the market to continue to push to the upside just like this. But like as you can see here, we failed to break this high here, and we broke this low here, giving us a new trend or a change of character to the downside, just because we failed to break this high point here. So as you can see here, the market pushed down, gave us this new low here, just because this is our lowest point here. So this is our low and this is our high. So let me just draw it out correctly so that you can see it. So this is our low and this is our high at that point. So we use the Fibonacci tool from the high to the low so that we can tap into areas of value or the golden zone. As you can see here, the golden zone was this area here, just because this is our fair value gap, guys. For those who don't know fair value gaps, it's just a gap like this, guys. As you can see here, we have this one here. We need 3 candles, so the first candle, the second candle, and the third candle, guys. They do not meet, they need to meet with wicks, guys. So those wick creations are called fair value gaps. As you can see right there, those 2 areas gave us that gap, and then we tapped into this area of that gap, and then the internal structure was also pushing to the upside. As you can see, from this low here we had this high, then we had this higher high, higher low, higher high, then we had the internal change of character, of which that's called a realignment, guys. So the change of character came up, and we used the Fib tool from the high to the low just like this. As you can see, the market went through areas of value and it tapped into this area here, as you can see here, and then we're going to refine it on the lower time frame so that you can see like what's happening on the lower time frame, guys. And previous structures, you can see that the market was pushing to the downside very nicely, and then this was a liquidity sweep within this point here, just like that. We had that X, and as you can see, this is our overall target so far, so that we know that we are targeting this area here. And you can just use like your risk to reward tool so that you can get like a clear cut risk. Let's say maybe you're risking 1 to 5, of which it's okay. And as you can see here, we can just refine this zone to this one here and this one there. So we are pushing to the downside, and then the market gave us some internal structure, so we need the realignment. So as you can see here, we had the sweep of liquidity, then we had our high low here, then we had our higher high, higher low, higher high, higher low there, then we had our higher high. Then this is a change of character right there on the 1 hour time frame. So this is a change of character, and we can draw like the internal breaks of structures. It's still okay, so that you can understand like how the market moves now. So the break of structure to the top, break of structure to the top, just like that, another break of structure to the top, just like this. So we are just breaking structures, pushing up until we tapped into this nice zone here. That is when the market reacted like this, pushed down, and then gave us a push back to the upside. And then we are looking for areas of value. So as you can see, we're already at that area of value, of which it's this one here. It's this one here. And for you to be safe, you can just take the entry and place your stop loss just above. So let's say maybe you place an entry here, and then your stop loss can be just above this area here, of which it's big, like 665, and it's a lot, guys. It's a lot. As you can see here, it's almost 66 pips, but like you can just move to the 15-minute time frame and try to wait for a lower time frame entry, guys. So as you can see here, we are on the 5-minute time frame, and then this is the structure. On the 5-minute, we had the high, the low, the high, the low, then we had a high, then we had a lower low here, of which this is a nice entry that you can take. We talked about it like on the last video when we talked about like lower time frame entries and all of those things. So we had that liquidity sweep of the high, then we had the change of character on the lower time frame. As you can see here, it's not that nice. As you can see, we had a weak creation right there, but like you can just wait for another confirmation. So let's say maybe this is our change of character, then we know that we are going to take an entry around here, and we wicked above, as you all know. But like even if we wicked above, the entry should be like this. The entry should be like this. Your stop loss should be just above that area, and then you're targeting the lows. And then this lower time frame entries can give you like a lot of risk to reward, guys, man. As you can see here, it's like 58-60%, guys. Imagine holding a 60% trade. So around here we can just zoom in, and as you can see here, we have this low here. So we just expect this low to get taken out. So let me just remove this, just because we're already done with this movement here. So we expect a clean push down. Let's say maybe we drop to the downside like this, and like I said, I look for entries like on the peak, guys, or on the extreme zone, guys. So as you can see here, this is our extreme zone. So the new entry should be like this, and we enter just below the zone, just like this, and then we can just use like the previous high, then we can target this as our overall target, guys, for around 51%. That is if it goes according to plan, guys. So that is it for today's video, and I'll see you on another one.